Hello everyone, George DeSantis here with a look at the market for the week ending September 9th, 2016. As I've been doing recently, let me read a disclaimer before we go any further. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's begin by looking at the monthly chart as we often do. Here is a monthly chart of the S&P 500. Of course, as we all know by now, on Friday we had a big drop, quite a few hundred points, almost 400 points on the Dow, and quite a few points on the S&P. So when we look at the S&P, we see that the S&P closed near the low, on the low of the month. Okay, made a new low in fact. So we are getting a pause here, if you want to call it that, or when we look at the shorter term charts, the daily and the weekly charts, we can see that there is that pullback that many of us were expecting, most people were expecting. Now the Kalman filter is still above the instantaneous trend line, so the trend is technically still up. Parabolic is still below the most recent bar, so the trend is not threatened here on the monthly chart. MACD histogram is in negative territory, but just slightly so, 1.77. We need to get more confirming evidence that this trend is in jeopardy before we begin to panic. Elder Force Index is still above the zero line, so we are getting a retracement, as we'll see on the shorter term charts, weekly and daily charts. But of course, we never know how deep a regression it would be. So let's take a look at the weekly chart. Here's a weekly chart of the S&P 500. And as we discussed last weekend, the market rallied up from the June level here, where we had a big bullish engulfing candlestick. And since that rally, we've flattened out, gone into a trading range. It looked last weekend, I made the point that it looks as though we had the possibility of a continuation of the uptrend, because we had this bullish harami inside bar. However, last week that was not the case. Now we have a bearish engulfing candle, and what we can see clearly here is that the Kalman filter that moved very far away from the instantaneous trend line, and of course price bars, regress back toward the instantaneous trend line, somewhat as I discussed earlier, that we might expect a pullback somewhere between the instantaneous trend line and the Kalman filter. So we got some of that last week. The big question is, how far down is the bottom? We don't know that. We wish we knew. But so far, we have a regression to the mean, or Kalman filter pulling back toward the instantaneous trend line. And the question would be, do we find support at the instantaneous trend line, which is above, let's see, it's at 21.14, and we closed at 21.27. So will we find support here, or will we break through that and go even lower? That's the question. Let's take a look below here. Well, the parabolic is still below the most recent bar. I think I mentioned that before. As far as RSI is concerned, RSI 12 is really still above the 50% line. So although we had this big drawdown here on last week, especially on Friday, we haven't broken below the 50% line. So that's encouraging from a bullish standpoint. But there is that threat that we could go even lower, as we can see. MACD just turned slightly positive, 0.01, slightly negative in fact, it's 0.01. And our percent R is now sitting right at the 80% line. So just as we discussed in previous weeks, we were wondering whether we're going to get this Kalman filter to put when and if we were going to get the Kalman filter to regress back to the instantaneous trend line, or what our friend Alex would call the consensus of value. The instantaneous trend line would be more of a what he would call the consensus of value of the market. So here we are, right here. We haven't broken below it. We wait to see if that's the case. So let's take a look at the daily chart. Here's one of the daily charts of the S&P that we usually look at. I recall discussing last week the fact that we had these hammers, and during the week we did get a little move up, not very much, but we did get a move up here. We hit the parabolic here, and we went below the most recent bar as we anticipated. However, on Thursday and on Friday, the whole story changed. So we now have a situation where Friday's bar once again hit the parabolic. We can anticipate it going above the next bar, Monday's bar. If that's the case, well, we can expect a little more of a drawdown, at least a little more. We don't know how far down we'll go. We haven't been able to go back to this target anywhere near the 2200 mark. So that's out of the question right now. RSI 12 fell below the 40% line. So this is not a good sign. On the daily chart, we are now in a downtrend. You notice the Kalman filter crossed below. Actually, this is a 930 system. So the 9 EMA crossed below the 30 weighted moving average. The blue line, the yellow line crossed below the blue line. So that signals a downtrend. It was pretty violent here on Friday, almost 400 points on the S&P. So we do have a situation now where we need to wait and see if we get some bottoming pattern, and we will see how that develops as time goes along. But all of these indicators, RSI 12 are now oversold territory. Williams pro buying indicator is now way down. Percent R, the 30 period percent R is way down here too. One might say it's oversold, but markets could remain oversold in a downtrend. So we can't be too excited about the fact that it's oversold. It's a downtrend now on the daily chart. Let's look at something else. Here's the weekly chart of the S&P 500. If you recall, I kept mentioning for the last couple of weeks, for quite a few weeks, that the NASDAQ found support at the instantaneous trend line. You can see that the Kalman filter bumped off of it twice, but then it went parabolic, and markets don't continue to go up forever. So we were talking about the fact that we had these dojis here, and we were wondering, when is this thing going to regress somewhere back down towards the instantaneous trend line? Not necessarily crossing below it, but right now, well, at least last week, we could see that we had this bearish engulfing candle. The body of this red candle totally engulfs the week before, the body of the week before's candle, and so we are getting this regression toward the mean, or a regression toward value. Okay, consensus of value. Parabolic is still below the most recent bar. But there's no doubt about it, this market has begun to turn around and to give us a downtrend here, especially on the daily chart. And we can see it here too. So how far down will we go? We need to see if we can hold at the instantaneous trend line. It's quite possible. RSI 12 is now crossing below the 60% line, but it's still above the 50% line. So there's some indication that the market still has some strength here. MACD histogram still above the zero line. So the bulls are somewhat in charge at this point, in spite of this big bar last week, this big bearish bar. Let's look at the daily chart. And here's the daily chart of the NASDAQ. A couple of things to note. We were in this sort of a squeeze, this squeeze here of the Bollinger Bands, okay? And it looked as though we would resolve the squeeze to the upside. But on Thursday, the bears came across in full fashion, full strength, and started taking this market down. And on Friday, they followed suit and took it down even further. And now we have, even though we had the parabolic go below the most recent bar here, now it's hit again by this big bearish bar, and we can anticipate, as I said on the S&P chart, that we might see more of a downtrend, and parabolic could move above the most recent bar. So we now wait to see what develops here. So in the middle of the chart, MACD is now in negative territory. So the bears have taken control here, and in a decisive way last week, pretty decisive way. Jerry Appel's sum of the rate of change had a false breakout, and the market had a false breakout right here. And now it's way down below the 4% line. So no trade in this case here at all. So this is a weekly chart of the S&P 500 with the impulse indicator with the red, green, and blue bars. Right now, we have a red bar on the weekly chart. So we're not allowed to be buying here if we were trading. Of course, if you're a long-term investor and you have good companies, you want to hold them for longer periods, that's a different question. However, the weekly chart is now prohibiting us from buying right here, buying the index anyway. There may be some individual stocks worthwhile buying. But let's take a look at the daily chart. And likewise, on the daily chart, we have a red bar. So we're not allowed to be buying, and we have a red bar on pretty high volume on Friday. MACD is still in negative territory, bearish territory here. And we have a spike down now. The big question, as I mentioned earlier, is are we going to recover from this pullback, or are we going to go further? I am personally, I have a portfolio of ETFs which I haven't sold, and I have sold all of my other holdings, including SSO. So I'm waiting now to see when this market will bottom again. If it will bottom soon, I will get back in. So have a nice weekend, and enjoy the tennis as usual. We'll talk to you next week.